welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny, Burt, the mother effing Dividend Diplomats. I'm going to talk to you about a Dividend King, everybody, or almost Dividend King, I should say. I got so excited for 2 years from now. They've increased that dividend for 48 years, so they are almost a Dividend King that is showing some major signs of undervaluation in this market right now.
Guys, smash that subscribe button. Give this video a nice thumbs up for Bert and Lanny, your favorite dividend investing channel here, guys, because we are bringing dividend stocks here, gosh, almost on a daily basis at this rate. Bert, I like the stock right now. I like where your head's at. Definitely catch our video from yesterday on Monday for our dividend quick pick stock pick in case you missed it for the two stocks we are watching this week. But man, this S&P 500 is on fire. We are filming this here the night of the 17th. The S&P 500 is up 23% over 4,700, nearing those all-time highs. Papa Powell keeping interest rates steady. Maybe some rate cuts. People keep arguing it's going to be March of next year. I think that's a little too soon, but we'll have to obviously see there. But with that, the market's gone up. But Bert, this stock is down this year, which is really nice.
Yeah, it's very nice indeed. And this company is a part of your everyday life. You just don't see them the way you see a lot of your consumer staple brands. They don't have the brand presence of the Coke. They don't have the brand presence of like Pepsi, the Procter and Gamble brands. It's just not there. But you bet that they play a major role in most of these companies and a lot of our fuel. Today, we are going to talk to you about Archer Daniels Midland, ticker symbol ADM. And if you caught our video yesterday, this shouldn't be much of a surprise. I teased that we're going to do a deeper dive on the almost Dividend King right now.
ADM guys, and as Bert mentioned, they process a lot of items that go into your food. Think your grains. They're now getting into soy heavily. I think Bert, you mentioned, or you're about to mention, more than likely that they have a new soy processing plant, a new little partnership as well with Marathon that they're about to kind of share some resource there with some new renewable energy there with Marathon.
Yeah.
So they're really into the food processing, which their product is used in your a lot of your a lot of your foods that you see on the shelf in stores.
Yeah, so that's the key piece of it. They're going to always be, with how large they are in their market leadership, they're always going to be at the front of these experimentations. What I saw when I was reading about the soy processing plant is the demand is so high for their processed goods. They needed this new plant, but it's not just domestically in the United States here. It was to ship it out. I think in the article mentioned Argentina, other countries in South America. So that's the big benefit here. Their products serve the entire world, and they're a major player on the global stage.
They are major. So major that they've been increasing their dividend for almost 50 years, almost that dividend king status. Yes, they have been a dividend aristocrat for quite some time. And recently, they came out with their earnings released and they wanted to talk about their full year earnings guidance right now. It's looking very strong. Bert, analysts came out to really tip their cap to ADM, but guess what? Stock price is still down 15.5% this year. So what was said in that press/earnings release that is getting you hyped up over there?
That's right. So their revenue and their earnings per share beat the analyst expectation. So even though they were down compared to last year, they still beat on the top line and the bottom line. So I thought that was huge. And the thing that always gets me is year-to-date revenue is $71 billion. So this is a large freaking company. I think it's not a small.
Take note.
Yeah, it's not a small dollar amount. There was the other gold nugget in there. There was the last bit of golden nugget here for ADM. You know what that was? It was that they said they're increasing that guidance up for the year. They're going to eclipse well over $7 of earnings per share for the year, which was a huge surprise to Mr. Market and investors like us that were expecting things to go in the opposite direction.
Exactly. Positive news. They typically do beat some analyst estimates as well. So you got to like that. But again, $7 billion of revenue. 2024, I know, is going to be more than likely a solid year. This is ADM.
Yeah.
They've done this stuff before. They've done it. They've walked these paths.
Yeah, and if inflation's coming down too, especially in the food sector, which you're starting to see those reports, it's only going to help ADM because at a certain point, you're going to tap out of food. Like we know you need to buy food and there are things, but there's a certain point where your budgets can't handle it. So if the costs are coming down, the cost for the items are coming down and consumers can buy more, that's only going to help ADM increase its sales and keep that cash flow going to get to that dividend king status.
Exactly. So this is why Bert wants to really dive into it. They've been around, they know what to do. They've got new things coming. They're deeply entrenched in your everyday living here, guys. Also, the balance sheet. We got to talk about the balance sheet too, guys, especially in weird economic time periods that we are in right now. We like to look at the current ratio and the quick ratio. Current ratio, if you guys first time listeners maybe here on the channel, we like over 1. Quick ratio, we prefer close to 1, but over, 0.5, obviously higher than that. Current ratio, which is current assets over those current liabilities, being able to pay your obligations right now, 1.6x. When it gets to the quick ratio, which takes out your inventory, your more difficult assets to turn and burn, quick ratio, when you reduce that, is still over 1x for ADM. That's just why, gosh, man, what a great company. You're getting
Yeah.
me hyped over here.
So, let's see how they do when we run them through our stock screen, which features 3 metrics and that bonus metric. PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends. I don't know why I had my finger sideways for this. You can't really see it. Got to turn it this way. And then,
Well,
yeah,
the first metric, the third metric.
that's right. And then that fourth metric, the dividend yield, that bonus metric. Lanny, can you hit them with that PE ratio if you don't mind?
Here comes. Let me tune up the band with the sweet chin music, guys. Again, 75.75 stock price. Gotta like that for some reason. Just very funny to see the double 75s, but the earning expectations of 728 is being used. A 10.4 price to earnings, significantly below the S&P 500 right now.
That is
Only less than 10 and a half. Or
all right. That is very low compared to the S&P 500. That annual dividend is $1.80. That gives you a sweet low payout ratio of 24.73%. Plenty of room to keep reinvesting in the business and reinvesting and getting you to that dividend king status.
yeah, I would say so. I mean, 48 plus years, as we've mentioned, 6.18% dividend growth rate. And if we can, guys, let me just pull out that last increase was well above that 6% on average. In fact, they went from 40 cents to 45 cents. So you do the math, 12.5%, 2 times that 5-year average. They did this year. You better believe it. Put it
In
on
a,
the board.
in a high inflationary period. That was like the peak of the inflation boom. It was fantastic. So we've already mentioned their dividend king. What's their yield? Their current yield is 2.38%. And if you're going to give one knock here for ADM, this is the one thing. It's just below its 5-year average yield of 2.52%. So they are not showing major signs of undervaluation because their current yield is below that 5-year average, but not by much. It's pretty much in line.
It's right there, right in line, guys. So again, a 10 PE, less than 25% payout ratio, 6% plus average growth rate, though I think it's going to be a little bit higher with that low payout ratio, and a yield that's way over the S&P 500, currently at 2.38%. Bert, what are you thinking right here with ADM, my brother?
They're solidly on the watch list. I'd love to see them get that yield to 2.5%. So they're really not that far off from hitting that mark. But especially with how much stocks have jumped up so far to start out December, there are not very many individual stocks that are showing signs of undervaluation. So ADM deserves a spot on your watch list to see if it comes down a little bit. Maybe you can pick up a share of 2, 3, 4, or 5.
Hey, don't sleep on Chevron.
Yeah. Don't sleep on big oil, which was the other feature of that top quick pick. What do you think, Lanny? What's your gut saying?
You can't go wrong with ADM. I think if you're somebody who's looking for current income, ADM, because you're going to get better yield now, plus you're going to get, some great growth going forward. If you're a long-term investor, ADM's a great stock, almost dividend king. It's a good stock. I mean,
Yeah.
I always am watching it as well.
Yeah. So everyone, let us know what you think of ADM. What do you think of this almost dividend king? Are you buying, watching, or are you just avoiding this stock altogether? Let us know down there in that comment section.
Guys, if you haven't, subscribe to this channel, like this video, keep saving, guys, keep investing. Let's all try to get to financial freedom, build that passive income stream like we've been doing here over at the Dividend Diplomats Hangout, guys.
That's right. Remember, you're either with us or you're against us, Jack.
Guys, that was Bert the Hurt Man and Lanny from the DD over and out.